There are plenty of stocks that we want to discuss that are on our radar, and for a fundamental perspective, Mayuresh Joshi, the fund manager, PMS at Angel Broking, joins us. Good morning, Mayuresh. Thank you very much for joining us. We have this report from Merrill Lynch, which says that the south of India has seen a cut in cement prices. And I think they have been particularly worried about stocks like Ultratech. Your thoughts on cement companies, especially south-facing ones?
Morning, Lata. So I think the obvious conundrum that south-based cement companies were facing was the capacities that were in place and how the demand was shaping up. The second element was obviously how realizations were panning out. And the south-based company did manage to take a couple of price hikes. But with demand expected to peter off, and that is what the news articles are suggesting, there might be some price cuts on the anvil or already taken, which probably means that the hikes that they've taken are probably getting offset with the cuts that might be taking place. The third element obviously is that the competition intensity remains extremely strong within the south-based players. So the utilization levels are around 75–76% on an average. But there is also every hope that there will be a lot more orders coming through from a state like Telangana, and a lot more infrastructure and irrigation orders coming through also from other parts, including Andhra Pradesh and Tamil Nadu. The sand mining issues are probably now behind them at this point of time. And in terms of the input costs as well, you're probably seeing some amount of moderation happen in terms of coking coal costs. So I think in the entire context of things, I think you're still going to see some stickiness happen in terms of reported earnings and cash flows. But I remain extremely stock-specific here. So from the south-based companies, I think Ramco Cements, India Cements is something that we continue holding and liking over a longer period of time.
Okay. Mayuresh, hi, good morning. The other stock I wanted to talk to you about was Bajaj Auto. Credit Suisse has put out this note today where they are worried about Bajaj Auto spending money on buying Bajaj holding shares rather than giving the dividend back to shareholders or the excess cash back to shareholders. Would that be a concern for you? And how would you approach the stock as we have some of these higher cost elements like the ABS, the inventory rationalization, etc.? Would you be concerned?
Morning, Sonia. Obviously, I think that is the concern that is plaguing the entire two-wheeler industry at this point of time. So what you're probably talking about in terms of the inventory built up, I think that is still pretty significant at this point of time. What Bajaj Auto is also trying to do in terms of gaining foothold in terms of market share gains, specifically between the 75cc, 110cc variants, I think that undercutting strategy in terms of gaining market share to probably prop up volumes is probably playing in favor of Bajaj Auto at this point of time. I think their strongholds probably are the 125 to 150cc, and they have probably had a better market share gain in that respect. If you probably look at the Pulsar, the twin braking system that has probably come through, and they've probably had some features added on to the 150cc Pulsar, you've probably seen some volume gain happening on that front. And exports also have probably held up. So one must take it with a pinch of salt that February, March, as the management also alluded to, I think you're probably talking about the base actually normalizing for Bajaj Auto. The third element obviously is how the input costs are shaping up at this point of time. And you're absolutely right. I think the ABS related issues are also going to be at the back of the mind, which also is an important facet to be looked out for. And the fourth element obviously is the overall demand dynamics at this point of time. So I think it is going to take a few months for normalization to probably happen as inventory starts getting liquidated and new model, new launches and the existing systems, including the models that they've probably got, starting to pick up. Yes, so in that sense, again, I think Bajaj Auto or the two-wheeler industry might have some amount of pain left over the next 2 to 3 months. But if the stock does correct, I think it does become a good buying opportunity for long-term investors.
Mayuresh, lately we have started seeing real estate companies offered as buys by almost everybody, right? I mean, we saw it in the CLSA report, we saw it in the Morgan Stanley report, and today we are seeing it in the HSBC report. What is your pick of the pack in real estate, if at all?
So Lata, again, I think it's a classical conundrum again for the real estate players at this point of time. I think with the introduction of RERA, the new accounting norms, I think a lot of adjustments need to be done in terms of the reported numbers. The second element, which obviously I think the street is worried about, is the high inventory levels here. Again, I think the unsold inventory is at an all-time high level. I think across regions and across pockets within these regions. So I think NCR, if I may point it out, is again one area where I think the supply is far more at this point of time. The third element obviously is the kind of leverage that a lot of companies are facing at this point of time. So when you're probably looking at a situation where I think the inventory liquidation probably needs to happen, the velocity in terms of new launches probably not getting displayed, because I think the launches are very few and far aside. And whatever is coming through, I think the velocity in terms of what demand is looking at this point is not picking up that significantly. So having a look at all these things, I think companies having less leverage on their balance sheet, which are having reasonable land banks, asset-light models, and where I think the pockets of interest basically lie, where the demand can probably come through far faster than what supply is. I think we probably like these ideations far more better. So in that respect, I think Godrej Properties is something that we continue holding in our portfolios. Even the numbers for Godrej Properties in the quarter gone by were very, very encouraging in terms of the new bookings that they had done, almost 1,500 odd crores. They've launched almost 1.7 million square feet of projects. They've launched 6 new projects, which is a rarity in real estate players at this point of time. A very strong brand pedigree, and you're probably looking at debt equity at 0.69 at the end of Q3. So I think Godrej Properties is something that we own and continue to hold in our portfolio.
Okay, all right. Mayuresh, just stay on. We'll come back to you in a bit. For now, Chandan Taparia, derivatives and technical analyst of Motilal Oswal, is also with us. Chandan, hi, good morning. What are the stocks that you would be trading this morning?
Yeah, very good morning. First, talking about Nifty, both the indices, Nifty and Bank Nifty, hit the recent highs. Nifty made high near to 11,387 kind of levels, but we witnessed some sort of consolidation with call writing at higher strike. So overall consolidation could be there, but small dips could be again bought in the market. Similarly, Bank Nifty till it holds above 28,688 zone, we are expecting the momentum to extend. So some consolidation with positive bias will be there in the market, and that's why stock space action is likely to be there. Here first it is buy on Mindtree. The stock has given a consolidation breakout. It managed to surpass multiple hurdle of 945, 950 zone. It is trading at its 5 to 6 months high, given a consolidation breakout with recent highest daily close. We have seen built up of long position with bullish candle on the daily scale. So recommending to go long on Mindtree with a stop loss of 933, and this stock has potential to move towards 993 kind of level on the higher side. Second trade, that is buy on McDowell. The stock has recently surpassed its falling supply trend line. It retested the same and turned higher. It formed a bullish engulfing pattern, taken support at 50-day exponential moving average. We have seen some short covering, and now the addition of fresh long can take it to higher levels. So consolidation breakout and the multiple price positive setup indicates the up move in the stock. One can buy with a stop loss of 575 for an up move towards 620 level. Two more trade, that is in the option front. First is buy on Oro Pharma. The stock is holding the gains. It has seen the strong breakout in last couple of trading sessions from its small rounding formation. The stock is holding well from the lower levels. It has taken major support and turned higher. The significant trading volume with open interest addition indicates that retest of the resistance could be there in the counter. So here we are expecting an up move towards 805, 810. So one can trade with at the money call of 780 near to 20, put a stop loss of 13, and as per the price movement, this option can move towards 30 to 33 rupees. One more trade, that is on the negative side on the SEC. Here we are recommending to go with put. The stock has already seen the strong momentum in last 2 to 3 weeks, but last 3 trading sessions are witnessing some built up of short position with call writing activity. The stock, which was continuously making higher highs, higher lows, had negated the same and started to form the lower highs, lower lows. So there is potential to retest the major support of 1510, 1500 zone. So to grab this opportunity, one can trade with at the money put of 1540 near to current price with a stop loss of 18, and this put can move towards 53 if the stock goes towards 1510, 1500 zone.
Okay. Chandan, thank you very much for joining us. Have a great trading day and a good weekend as well. Well, as we near elections, we have started a series that's called Election Exchange. It's the economy. We're looking at various aspects of the economy. In the first of this edition, we spoke to 3 economists on what they made of several macros like GDP, inflation, deficits, etc. during the 5 years of the BJP government. Here are some pieces of opinion from those economists. We'll play more through the day.
I don't think that at current levels of productivity and given current institutional arrangements within which the economy functions, that it would be prudent to even aim for 10% growth or even 9% growth. I simply do not think that is sustainable. If demonetization was self-inflicted, then there is a growth price to pay, as the economic survey said. But then one has to recognize that demonetization clearly had explicit political goals, which seem to be very popular in people's heads, such as doing away with corruption, getting rid of black money. And obviously when you do these things, there may be a negative impact on the economy. And therefore one has to, leave it to people's political judgment whether demonetization achieved those beta goals that government, today uses to justify the measure.
The government has these three macroeconomic targets, which is 4% inflation, 3.5% fiscal deficit, and a 2% current account deficit, which is what we believe is sustainable sort of macro stability, then growth seems to be around 6.5–7%. That's the sustainable rate of growth. Now, it's not bad, it's not great. The question really is that, is this all we can do if we need to maintain macro stability? So the question is, how do you push potential growth out from, say, 7% to 9%? And perhaps that's what we'll come to later. It's, whether the supply side reforms were adequate to push that growth.
It's unfortunate that right now, quality of statistics was one of the things that, as somebody who has spent more than 3 decades in kind of Western academia, was something we could really be proud of in any discussion, that the quality of Indian sort of statistics is considered to be very high. Now, the whole fact that we have this sort of GDP number revisions, which are going on almost like in a sort of, like when you fast forward a film, sort of it goes so fast that you don't even know what's really going on, right? And secondly, with any time something is not looking good, like the unemployment numbers, you have all this back and forth and essentially things not being released.